There are two basic types of property tax systems. There's a levy-based system and a rate-based system. And you really have to know and understand and appreciate how these two work to fully appreciate the changes to the property tax system that have occurred since prior to 1990. A levy-based system is where the taxing authority has a dollar amount of levy. They submit that dollar amount to the county assessor, and the county assessor calculates a rate each year based on the assessed value. And so the rate fluctuates every year, depending on the assessed value. In a rate-based system, the taxing authority is a rate. So the taxing authority certifies the rate to the county assessor. The assessor doesn't calculate a rate, he or she just applies that rate to the assessed value. They operate completely differently. You have the handout in front of you. So in a levy-based system, in the first year, the taxing authority has $1 million levy authority. They certify that to the county assessor. The county assessor calculates a rate with $1 billion in assessed value. The rate would be $1, right? The second year, if the value of the assessed value of the district doubles, the levy stays the same at $1 million. The rate per thousand is cut in half to raise the same amount of money. In a rate-based system, it's just the opposite. They certify a rate of $1 the first year, $1 billion in value. The taxing authority gets $1 million. The second year, the rate stays the same at $1. If the assessed value goes to $2 billion, the taxing authority gets twice as much money. Okay? If you look at an individual property, under a levy-based system, in that same scenario, a $150,000 house the first year would pay $150 in taxes. The second year, even though their value went up to $300,000, they'd still pay $150. Under a rate-based system, it works differently. A $150,000 house would pay $150 the first year. The second year, they'd pay $300. Because the value doubled, the rate stayed the same. So the two systems work entirely differently. And you've really got to appreciate that to know where we are today from where we were back in 1990. Let's go back to that first illustration, number 1, levy-based property tax system. The system under the pre-Measure 5 system was purely a levy-based system with a little bit of a difference. From year 1 to year 2, instead of the levy amount staying the same at $1 million, the system works so that practically every single taxing authority got to increase their levy authority 6% a year, called the tax base. Tax bases were allowed to increase automatically 6% a year. So under a levy-based system, that second year, the levy wasn't $1 million, it was $1,060,000, and the rate would have been 53 cents, not 50 cents. So that's just the way the system worked. Everybody got to increase their tax base 6%. Now by everybody, I mean the City of Portland, City of Klamath Falls, Portland Public School District, every district, regardless of size, regardless of what was going on in the district, they all got to increase their tax bases automatically 6%. Bob?
You mean when assessed values went down, taxes didn't go down?
No, they didn't. Under a levy-based system, the tax rate would just adjust and they wouldn't go down because they were increasing their tax base 6%. So 1990, November of 1990, Ballot Measure 5 passed. So why, if that was such a great system, why did the voters think they needed to change the system? What was happening during the 1980s? What was happening to real estate values in the 1980s? Absolutely nothing. The assessed value from 1982 to 1990 was essentially the same. So what was happening is values were staying the same. Tax bases were going up 6%, and the tax rate was going up. So as you can see by this slide, assessed values increased 53%. They actually went down. Total statewide assessed value actually declined between 84.85 and 85.86. And that was back when assessed value and real market value were the same thing, which makes it even more unbelievable. Tax basis increased 6%. The effective tax rate, because of the levy-based system, tax rates went up. Total taxes increased 114% between 1980 and 1990. Nowhere was that more evident than that last year. Taxes just that last year really went up. So people, I mean, the market was down. Interest rates were 18%. I mean, if you think this real estate market is bad, it was even worse back then. But yet people kept seeing their taxes go up. So finally in 1990, they'd had enough, and Don McIntyre, an anti-tax activist, put together Measure 5, and he actually wrote it fairly well. I mean, Don was a pretty smart guy. Other than that minimum value during the year piece, which he and I have actually argued about, he still thinks it was a good idea. But from an administration standpoint, obviously it was a nightmare. But he actually, other than that, wrote it very well. And one of the things he did was he recognized that people wouldn't vote for a property tax relief measure if it meant schools would really be harmed. So he put a couple things in there. He said the tax rate for schools was limited to $5, but he phased that in over a 5-year period to kind of soften the blow little by little. He also put in a thing that said the state had to replace any money lost due to Measure 5. Now that was almost a political piece that he threw in there just to get people to vote for it, but it's had a profound impact on the way schools are funded in the state. Before Measure 5, the state paid about 30% of the cost of K through 12 public education in Oregon. Today it's 70%, or close to 70%. And it's one of the reasons Elizabeth was talking about why the state is so far in the hole, is because they have to pump in so much money to the K through 12 property tax system. What Measure 5 did, and I'll get to you in a second, Paul, what Measure 5 did is it shifted the burden of funding K-12 education from the stable, reliable property tax system to the unstable, volatile personal income tax system. And that's why schools are in the position they're in now. Paul?
Just a historical reference, before this implementation, we had a school district in Multnomah County that was $53 per thousand tax rate. It was the highest in the state, I believe. It was Helix School District. And it was $53 and change per thousand rate.
You also had school districts in heavily timbered areas that had zero tax rate. So that's one of the side benefits, is it did equalize school funding. Yes?
Just another note on the statutory obligation for the state to backfill what Measure 5 lost in the schools. That was only for a limited period. Now there's just a moral obligation as a legislature to backfill.
Well, and the state had been trying to equalize school funding for a long time. There were some court cases out of California, out of Massachusetts, and out of Oregon that really said, didn't require it per se here in Oregon, at least the court case in Oregon didn't outright require equalized funding, but it sort of hinted at it. And so they'd been trying to figure out a way to equalize school funding for a long, long time. They just couldn't get there. I mean, because whenever you make a change, there's winners and losers, and politically they just couldn't figure out how to get it done. Measure 50 gave them the political cover, if you will, to say, okay, we're going to do it. We're going to equalize school funding. If they're paying 30%, it's one thing to force equalization. If they're paying 70%, it was a lot easier for the legislature to design an equalization formula. And the formula they came up with is pretty much in place today. I mean, it hasn't really changed a whole lot since it took them a couple of sessions after 90. But that's really where we got equalization, was a direct result of Measure 5. Okay? So Measure 5 said general government, basically all non-education rates, are limited to $10. Education is limited to $5 after a 5-year phase-in. So in most areas of the state, the education district was over the $15 the first year. And so people got a tax break. General government, a lot of areas were over the $10 limit the first year, but we were still under a levy-based system, remember? And so right about 1990, the recession ended, the real estate market came back, values started going up, which meant the rate started coming down. After the first year, most areas of the state were not under compression, not over the $10 limit in the general government side, with the exception of City of Portland, because their taxes are so high, and a few small rural areas. City of Lakeview, City of Lakeview was losing 40% of their tax base to Measure 5 compression. City of Reedsport, Klamath Falls, smaller rural areas where the value wasn't increasing that fast, and so the rates weren't coming down, so they were still over the $10 limit. But practically every area of the state was over the $5 limit. So what you had was a hybrid system. General government districts were still under a levy-based system where the rate fluctuated up and down, depending on the assessed value. Generally, they were coming down because values in the 90s just took off. Of course, people accuse the assessors of doing that on purpose, just to offset the reductions that people thought they were supposed to get under Measure 5. But the education rate was over the limit, and it was actually coming down $2.50 per thousand every year for 5 years. So the two sort of offset each other. General government taxes were going up, education taxes were going down $2.50 a year, despite the fact that the values were going up so high.